that if you've got a bank that is got, say, $900 billion in assets, and most of these big four are in that sort of 800 billion plus, then half of those assets are actually residential mortgages. Okay. Why is that important? It's important because that is the bread and butter for Australian banks. Nowhere else in the world would you see a bank's balance sheet with half of it in residential mortgages. Most countries would have it somewhere between 20 and 30%. Okay. So the fourth point here is the economy. You need a strong economy. You need a robust economy. It is an important factor when you are looking at property prices. Does move the needle, more particularly unemployment. And I'll come back to that in a minute. Okay. GDP growth, you've got to have GDP growth. We are very on the borderline of a recession. I think we'll probably end up escaping a recession, but we'll talk more about that in a minute. Fifth one there is the government spending, infrastructure, incentives. And you saw that the reason why we came out of COVID so strongly is because the government actually provided that spending and the incentives, the JobKeeper, JobSeeker, and so on, and poured a lot of money in infrastructure, which we are seeing all the way now, to make sure that the economy actually bounces up quickly. Basically, to make sure that this unemployment is in check and GDP is in check. So if the government did not do what they did during COVID, then you would have seen a deeper recession and you would have seen a bigger spike in unemployment. Okay, some of the things that the UK government is going through at the moment. The sixth one there is banks' risks and delinquencies and loan write-off. I did say I'll come back to you when we're talking about the bank's asset class. So what are delinquencies? Delinquencies is when you don't pay your loan. If any of you listening and you've got a loan at the moment, if you don't pay your loan for 1 month, you don't pay for 2 months. After 2 months, you go on what the bank says you're on a watch list. They watch you. Then you go 3 months, you haven't paid, you go on what the bank calls a worry list. These are real words that they use, okay? So the bank is worried that you will not be able to pay your loan and they will have to come and take your mortgage and do an auction on your property to recover their loan, okay? That is what a delinquent loan is. And the loan write-offs is when they have actually sold off your property and actually have, if the bank has made a loss, that's a loan write-off. Now, I can tell you with my many years in banking and sitting on a lot of the risk committees and executive committees of banks, that the amount of time you spend talking about residential mortgage delinquencies and write-offs is minuscule, okay? In a 4-hour risk committee meeting, you might talk about it for 10 minutes, and I'm not exaggerating. So my point here is, it is always in the news that we're going to have mortgagee in possession sales. We're going to have a lot of delinquencies. It's all going through the roof now. When people say delinquencies have doubled in some suburbs or tripled in some suburbs, what they're saying is it used to be 0.01 and now it's 0.03. Okay, it's alarmist at best. Now, when should we worry about delinquencies? When you worry about delinquencies, when you've got unemployment at somewhere around 7%, maybe north of 6.5%. So if I go back to the last real recession we had, not the one induced by COVID, the last real recession we had was in the early 80s. You've got to go back to 82, 83, 84. And yes, I was here. And unemployment was at 7.9, okay? We had recession at that time. It was negative growth quarter after quarter after quarter. There were no jobs. Migrants migrated here and then went back to their home country. There were no jobs, okay? At that time, when the bank possesses your house and actually puts it on the market for auction, there were nobody was turning up. that's when property prices fall. And that's when you've got to worry about the price movement that I'm talking about up here. Okay. Now, when at the moment, if mortgage possession sales happen by banks, I know what would happen, and it's already happening. There would be 30 to 40 people at the auction waiting to get a bargain. And they will always sell. Our auction clearance rates have not gone down, even though delinquencies have actually gone up. Okay. So this is very important. The unemployment is very important when you're talking about delinquencies. And I'll say the delinquencies are still very, very, very low, and the banks are not worried about their loan write-offs and the delinquency book. The thing in Australia is people pay their mortgage. People always pay their mortgage. So somehow they get a second job, which is possible at the moment with unemployment so low. People will find a way to pay that. They might not pay the credit card, they might not pay the car loan, they might not pay the personal loan, but they will pay their mortgage. And that is what I have seen in this country for the last 40 years. The last factor there is also has a play in terms of either directly or indirectly in terms of moving the property price. Okay? So, for example, where our foreign exchange rates are at the moment, our foreign exchange rates are really low at the moment. Against the US, we're at about 64.5. Now, if we're at 74.5 or at 80, then for people to bring money here to purchase a property would obviously cost them more. At the moment, it costs them less. Okay. And you'll see in a minute who is buying a lot here. And FX has a. So the war that we're having in Ukraine had supply chain issues, caused a lot of prices to go up around the world. COVID caused a lot of supply chain issues. So these two things had a play on inflation. Inflation had a play on interest rates. And therefore, interest rates going up actually dampened the housing market to some extent, okay, for a while until this year came. So these are my 7. So the point I'm making here is there isn't one factor. Keep in mind, there isn't one factor only that causes the property prices to move, okay? If you listen to the news a lot, they will only talk about one factor, and that's just interest rates. My number one factor is supply and demand, and that is the reason why property prices are not falling, okay? Anyway, we'll come back to more on that in a minute. Now, in terms of some of the recent news and what's happening in our economy, left side is negative for housing market, right side is positive for housing market. So just a few quick things here, right? Today we all know the last 3 months we've had the RBA on hold. What's going to happen next? Everybody's got a view. We'll talk about it in a minute. Secondly, the US interest rates is being talked about a lot. So the next meeting is on the 20th, I think. FOMC meets on 20th. And that's going to be an interesting discussion because US inflation figures came out today, and it's at 3.7, okay, for August, 3.7. July figure was at 3.0. So what caused it to go from 3.0 to 3.7? It was actually oil prices. The biggest factor was oil prices. Oil prices actually went up, okay? So we need to watch that. The US Fed is very cognizant of the fact that if they put the rate up one more time, that potentially it could dip them into a recession. So they're very, very conscious of that. The likelihood is that they will not increase rates from here. Our inflation's tracking a lot better. So we were much higher end of last year. We're sort of the graph is coming down. So we're down to 6% now for the second quarter, and that was 7% in the quarter before. So there is a strong likelihood that over the next 2 quarters that we could, in fact, the inflation could come somewhere around that 5, okay? And by the middle of next year, you would expect to see a 4 in front of it. So if the trend continues, there are some headwinds, and we will talk about that in a minute. Then the recessionary fears. You have got recessionary fears. US, UK. UK is in a bad shape. Europe has a lot of volatility. And the one we need to watch very closely is what's happening with China. You all probably saw large property giants falling there, which causes a huge issue for their banks. And there is certainly less manufacturing going on in China. The main benefactor of that, people moving their manufacturing out of China and going to places like India, Indonesia, Vietnam, Malaysia, etc. On the right side here, why are these positives for the property market? Because there aren't many properties out there. There's a shortage, and the shortage of supply and the increase in demand is very, very profound. Okay. And we are facing a rental crisis, national rental crisis, something I've been talking about for about 2.5 years now. And this rental crisis was going to happen because of a number of factors we'll talk about in a minute. Our unemployment is still at very low levels. It's at 3.7. At the moment, the figure came out today, 3.7 for August. We're up from about 3.5 2 months ago. Okay. Last month was also, it's flat the last 2 months, 3.7. That's still very, very low. We need unemployment to be at least above 4. Okay. And that will actually happen. What that does is, so before COVID, you all know that unemployment was around 5.1, 5.2. So we're in a very good place. Very, very good place. Okay. These figures are very similar to what's happening in the US as well. Migration capped. Well, we all know that there's going to be a significant number of people are coming here. I've got a graph to show you later. That's causing the demand to surge. And our GDP is the other important number. So GDP, I had actually predicted that this GDP number that just came out a few weeks ago, that we will be per capita negative. And we are per capita negative. So our saving grace actually with GDP has actually been the number of migrants that are coming here and the number of students that are coming here, people who are coming here and buying your white goods. So your Bunnings and your Harvey Normans and your JB Hi-Fis, their sales are still reasonably strong. And those purchases are helping that. The other thing that helped that was actually the investment that the businesses and the government is making in infrastructure and so on. That helped the GDP to be positive. Otherwise, that figure would have been negative. Okay, now what's making headline? I won't go through each of the boxes here, but the key thing is this last one here. House prices rise despite dramatic cycles of rate rises. So this has surprised everyone. I mean, most of my listeners who've been listening to me for the last 12 months, I have been predicting that 2023 will be an increase overall in house prices in Australia by around 8%. Okay. And this was against the government the RBA, as well as the major banks actually predicting a fall of anywhere between 8 and 12%. This was late last year. And I have seen 5 cycles of property, tightening, the interest rate tightening cycles. I've seen 5 cycles in the last 42 years. And I can tell you that property prices in Australia do not go down as a result of increasing interest rates. Talking of interest rates now, so here are the cycles, okay? We had a tightening back in 93, 94. We had another tightening here, June 99. We had a long tightening period here, a small tightening period here, and then, of course, this one here, okay? This is a smaller picture. So this massive tightening happened over here, all the way from 0.1 to 4.1, 4% in a very short space of time. So the story I want to tell you here, then the takeaway for you today is that if I look at the average cash rate for the last 30 plus years, okay, if I look at the cash rate here, you can see that it's at 5%. That's the average. That's the average. So if you've lived through all of this here, you'll have a better picture of what is going to happen to the property prices. The Reserve Bank, so where are we? We're at 4.1. We might stay at 4.1 before it starts going down. Okay. So are we at the average? We're not even at the average. So you might say, what's all the fuss all about? Okay. The fuss is all about the fact that this was a one of the facts is that this fall, if this fall did not happen from here down to here, which is once in 100-year event, because that only happened because of COVID, okay? We had to throw everything we had at COVID to help the economy and the people. So we had to bring it down to here, 0.1. Never happened before. Otherwise, you might have sort of gradually seen this sort of do that, which is not steep at all. But because there was such a steep increase, and because you all had fixed rates at 1.89 and 1.99, I mean, to be honest, it's not such a big deal to be paying what we're paying at the moment. Okay, it's not such a big deal. It's just that the amount it has grown in a short space of time has been quite dramatic. So my first property in Australia was in 1983 when I paid 17.5% for my mortgage. Okay, so where does the RBA want the cash rate to be? We want it to be right here between 2 and 3%. 2.5 is the perfect place for cash rate to be. But so long as we are below 3, the RBA will not care. Okay, so we've got to get this below 3. Are we so far ahead of 3? No, we're not. We're at 4.1. You could bring it down to below 3 in about 3 cuts if you're aggressive. So moving to the next one, interest rates, where to from here? So we've had 3 pauses. So what does the want to see now? The first, inflation slowing. If inflation slows further, they don't have to do anything more. Further signs of GDP slowing. Now, well, GDP is already slowed. We don't want it to go into negative territory because we don't want to go into a recession. Only psychologically, right? But we are all feeling the pain anyway because we're all paying double the amount of our mortgages. And then we want to see non-essential retail sales go down and unemployment to tick up. Nasty thing to say, but we want to see unemployment tick up a bit. Because the purpose of all of this is that if people are spending less, means GDP will slow down. If people lose their jobs, unemployment goes up, then you've got more wages competition. Okay, and then there's the last 2 factors here. The recession and stagflation in the US and UK is quite likely, actually, quite likely. So that could slow down our economy further. So we need to watch that in China, as I said. So everyone has succeeded in actually doing their part in not spending in non-essential goods and bringing the inflation down. Okay. There are, as I said, there are some headwinds. The headwinds are mostly coming from increase in the rental prices, increase in insurance costs, increase in oil prices. So there's a number of increases there that we've got to keep in check. And at the same time, it is important for us to stop buying non-essential goods. Okay, car sales actually went up quite a lot as well. Okay. So the cash rate, another takeaway for you today is the cash rate determines your mortgage rates, your variable mortgage rates, I should say. So normally a bank would use 2% margin. So if the interest rate is at 4.1, the variable housing loan will be around 6.1, about a 2% margin on that. If somebody listening to me is paying 2.5%, please find another bank. Okay. Now this part is to do with the fixed rate. So how do banks set the fixed rates? Not set by the RBA. There are 3 factors that the banks look at to set the fixed rates. The first one is the curves I'm showing here. It's called the 30-day interbank cash rate futures implied yield curve. Sorry, it's a mouthful. But this is where the money market of a bank thinks that rates are going to go in the next 2 years. Okay, roughly 2 years. And then on top of, when you're looking at a view after 2 years, then you've got to look at what's called the bond market and what's called the interest rate swap market. Okay, so interest rate swap is a derivative market. So these three factors actually help you build a yield curve out to about 5 years. On that yield curve is where the fixed rates are set. As I said, nothing to do with the RBA. Nothing to do with the RBA. Okay, the bank's money markets, locally and overseas, determine what your fixed rates are based on those three products. This product, the futures implied yield curve, the interest rate swaps, and the bond rates. Okay, because the bond rate swaps are longer term. This one is shorter term. So you build a yield curve out to 5 years using interpolation and all those type of mathematics. And the reason why I'm showing you these four is that the fixed rates can move really, really quickly. So this was at 29 October 2019. So you can see that this is what money market thought would happen to the actual cash rate. Okay, this is cash rate out to the future. Now this is 30th of June 2022. This is what money market thought would happen to the cash rate all the way out to November 23. At 30th of June 23, not too long ago, this is what money market thought would happen to the cash rate. So they had the cash rate going up to 4.5, if everybody can see that, and then tapering off later on, but not going past about 4.6. Then here you see the latest curve, which is very, very flat and seems to taper off there. That's 11th of September. So this is the most recent graph I put over there. The point I'm going to make to you is that when inflation starts to correct, and it is correcting, and if inflation gets with a 4 in front of it, okay, as inflation comes with a 4 in front of it, I think the 4 in front of it is going to come by around April, May next year. If there's a 4 in front of the inflation rate by April, May next year, the fixed rates are going to fall below 4% by June next year. I'll say that one more time, okay? Fixed rates today are 6%. If you go fix a mortgage, 6%. I'm asking you to just bear the pain. Bear the pain. If you're paying a high variable rate, bear the pain until about June next year. That is the time to go fix your rates. Fixed rates are going to fall 5 times faster than variable rates. And so a takeaway for you today, and my prediction is that the fixed rate will be with a 4 in front. It could even by June next year have a 3 in front of it, 3.7, 3.8, 3.9. What will that do to the property market? Keeping in mind, supply is low, demand will not change. Okay, demand will only increase, and interest rates fall a good 2% from today. We will have a mini boom in the property market. We will have a mini boom in the second half of next year. That is a takeaway, another takeaway for you today. So where is this demand coming from? The graph on the left, first and foremost, have a look at the forward estimate. So we have got 400,000 people that have this is net migration, okay? Not people coming in minus people going out. So we have at 400,000 people. This is a record, by the way. It's never happened in the history of Australia, coming here in 1 year. Then it tapers off to a little bit less, and then a little bit less in the future years. But this is the future figures are only estimate. This number is a real number, okay? Now you've seen that the biggest foreign buyers of Australian properties are still Chinese buyers, and they're spending significant amounts of money. I think these numbers are underdone. So we have you can see all of these bullet points here, okay? So all these bullet points are still very, very valid. I'll go to the next point here. your high net worth individuals. High net worth individuals, HNWIs, where are they moving out of? Where are they moving out of? This is the top 10 countries where they're moving out of. Russia, no surprise. China, no surprise. India, no surprise. Okay, none of these are surprises. And which are the top 10 countries they're moving to? The number one country is United Arab Emirates, mostly Dubai. The second one there is Australia. Okay, so we are one of the most sought after places for high net worth individuals to move to. And all these factors actually have a play when it comes to property prices. This demand, the demand is not only local demand, demand is coming from overseas as well. Okay, then we all know about students. We all know at COVID time what happened. Oh, no students came, no migration happened, so nobody bought apartments. People negotiating their rent, trying to keep their tenants in the place, okay, bringing the rents down by 30%. So students make up a big number in this country. On the right side, you see where the students are coming from, okay? The top countries, China, India, Nepal, Colombia, Philippines. On the left side, where are they going? So the biggest number is in New South Wales, 237,000 students in New South Wales, okay? 608,000 students in Australia. That is a massive number. So it is another important factor that is creating demand, causing rents to go up, causing property prices to go up. Now, this one actually shows you two things. One is the population change, which is the red, and the other one is the completions, okay? Dwelling completions, the blue graph. So dwelling completions are coming down here, okay? And it's not gonna go up in a hurry. And on the right side, the population change has shot all the way up and it's tapering off here. That's going to continue to go that way, and this is going to continue to go that way, causing a gap. Okay, so a few of the facts that I want to share with you today. Housing supply will significantly lag demand for the next 5 to 10 years. Everybody is talking about how to solve the supply issue. That is agenda item number 1 for state governments and federal government, except for the yes and no vote, which is just a noise in all of this. Okay, the shortfall we're going to see for the is 106,000 dwellings over the next 5 years. That is massive. There is also, number 2, a huge price gap between house prices and apartment prices, which is expected to close, in my personal view, which is expected to close in the next 24 months. And I'll show you a graph in a minute. The rental crisis will worsen before it gets better, again, because of the supply issue. And we expect rents to go up another 15 to 20%. If some of you were listening to me 2 years ago, I told everybody, go and fix your rent out as long as you possibly can, because rentals going to have an issue. And that's happened. Increased cost of construction is a big issue as well, okay? And we've had a lot of home builders go down, and that has also causing a huge impact on the supply side. So these are some facts. Now, I said I'm going to show you the gap between house prices and apartment prices. So we got $200,000 jumps here on the left axis, okay? And what you're seeing here is a 30-year graph. The red is houses, and the blue is apartments. Of course, up to about here, not much change, because in 200,000 lots, back in 1992, you could buy an apartment for 80,000 and you could buy a house for 120,000. So the gap was not much. But the gap now, particularly in this part here, is huge. Okay, it's become huge. And this gap, this is regional, by the way, nothing much happens in regional, but this gap was caused primarily because of the COVID reasons. And that gap is going to have to close now. Okay. And this is the reasons, my key reasons why it is the perfect time to look at apartments. So if you've been here for the last 3 or 4 years in Australia, you'd be very, very skeptical about what I'm going to say right now. Okay. I have been investing here for 40 years, and I know that when prices go up, everything goes up. The anomaly we have had in the last 3, 4, 5 years is a short-term anomaly, which is going to get corrected now. So number one, apartments are due to actually increase. Okay, already is increasing significantly in some suburbs. Demand, I'm not going to talk about again. You can read all of that. So demand will continue to be strong. And this is very important. The amount of apartments that commenced construction in 2020 and 2021 was very low. It was 70% down from 2016. Okay, commenced construction. So just think about this. Because there were no students coming in 2020 and 2021, no migrants came in 2020 and 2021. So the developers who build apartments stopped building them. Okay, they stopped building them. It takes a 3 to 4 year project to start and finish an apartment project. By the time you got a site, you do your DA, your development approval, you start construction, the whole process takes a minimum of 3.5 to 4 years. So because the developers stopped in 2020 and 2021, your completed apartments in 2023 and 2024 is going to be the lowest for a very long time. I hope that all makes logical sense to everybody. Okay. And here's the graph that shows it. So the completed apartments in 2022, for those ones, the project actually started probably in 2019, 2018 maybe. Okay. So those ones, 14,000 apartments were completed in 2022. In 2023, it's only 9,600. In 2024, it goes down to 4,500. Now, of course, more apartments are getting developed now, and they will complete next year and the year after and the year after. But the point is that at a time when your completed apartments are actually falling, the demand is going on the opposite way. So we've got the highest level of migration in our history. We've got the highest level of demand for properties in our history at a time when the completed apartments are actually dwindling. What does that cause? My number one price mover was supply and demand. So it'll cause an issue, okay? The fourth factor here is rentals are heading up and up, and there's a chronic shortage of properties. Fifth factor, affordability issues with houses and lifestyle change and more downsizes now because of COVID. There's more people actually accelerating and downsizing and cashing in with their houses and moving into apartments. So this is another factor that we can't ignore, okay? Plus the land, there is not enough land in this country, so people are gonna have to opt buying apartments and staying in them for longer. And then you got low employment, huge infrastructure spend, so the economy will continue to be strong and unemployment will be in check with a huge infrastructure spend, and the cost of construction is significantly up. Again, my top 7 points why it's a perfect storm for apartments, okay? Now, the cost of constructing an apartment, and I'll just touch on that for a minute because I talked to a lot of developers. And I'll tell you that pre-COVID, the cost of building a 2-bedroom apartment in Sydney was around 260,000 average, okay, plus or minus 10,000. Right now, a construction of a 2-bedroom apartment is somewhere around 400,000. Okay. So if nothing else happened, you'd expect apartment prices to go up by about 140,000, right? So keep that on the back of your mind because that is an important factor. All these 7 things are definitely happening. A very quick one on the vacancy rate. So you all remember that during COVID, I've been talking about, empty apartments and so on. 3.9% is where we landed with our vacancies. That's a very, very high rate. Now, nationally, we are at 0.9. Sydney is at 1, which is at chronic levels. In some suburbs, we are at 0.2, 0.3. Like Brisbane, like Perth is 4.3 for the whole city. Adelaide's 0.3. These are chronic numbers, okay? chronic numbers. And monthly change, you can see monthly change still going down. So that causes investors to come in. So price rises, quarterly median house price July 2023. So Sydney this year has been up 7.7%. And you can go through and look at the other numbers. We've been sort of leading the pack in that space. Okay. So the median price has jumped again, despite all of these hype about interest rates, delinquencies, mortgage in possession sales, and all the negative stuff that you've heard over the last 6 to 9 months. Okay. We are going up in prices. And here's the price growth since the trough, since your bottom in your city and up to current. Okay. So again, Sydney is leading the pack. The others, Perth has been pretty strong. Brisbane has been pretty strong. Adelaide has been strong as well. Melbourne's probably not as much. Now, so I've talked quite a bit about the economy, talked quite a bit about what haven't said enough about what we do. What we specialize in as an agent is we value pick. We pick projects where we think that we're going to get the biggest bang for our buck in terms of capital growth. For me, capital growth is the most important thing. Okay, most important thing. When you're an investor, that's the most important thing. It may not be as important if you are just an owner-occupier. But ultimately, everybody wants their property. This is your biggest asset. They want the biggest assets to go up in value. So I'll give you a few examples here of apartments. I'm not going to talk about house and land. I mean, yes, we sold house and land 2 years ago in Brisbane for $450. And the price is now $680 for those. Yes, we sold we sold houses to people in Adelaide about a year ago, and their values have gone from 500,000 to 620,000. Okay, I can talk about houses as well. So we go where we're going to get value, and we go anywhere in Australia where we're going to get value. So Tallawong Village, some of you may know, it's at Tallawong Station. It's a Daycorp project. We were selling there 18 months ago for between 650 and 680. I saw good value in that. So I said, we want to do this project because I see value in that. Out of 35 projects we had in Sydney at that time, we picked that one. Okay. Current price, the new buildings are coming up, are now 750 to 780. Have these guys settled yet? No. I bought one. Have I settled yet? No. So the completion is March 2024. By March 2024, I expect this to be 800,000. For all the reasons I have just given you, it's going to be 800. So people who bought at 650 to 680 are going to make, when they settle, they're going to make at least 100,000 and maybe more. Okay. How did we achieve that? It's called value picking. Hugh Schofields, Sabina was the builder. We sold apartments between 510 and 540. These are completed now. Current pricing, 620 to 660. Okay, again. So Evolve Blacktown, we were selling between 480 and 520. That was nearly 2 years ago. Now it's around 600. It's completed. Babylon in Rouse Hill, we are still selling. Okay, we're still selling. However, the prices were 639 to 700, depending on your size and your location and whether you've got a bigger deck or a bigger balcony. And now the prices have jumped. This only happened a month ago. Okay, the prices jumped a month ago. Did I buy here? Yes, I did. Okay, why? Because I saw value. And the completion is not until end of next year. By end of next year, I am guaranteeing you that the prices will be well over 800,000. Well over 800,000. And the same goes to the Tallawong Village. By end of next year, they'll be well over 800,000. Why am I saying that? Because we sell in Castle Hill, we sell in Norwest, we sell in Bella Vista. And I am selling Norwest Quarter. Our team is selling Norwest Quarter at the moment. There is no apartment in Norwest Quarter below $1 million for 2-bedroom. And they are selling like hotcake. There's very few left. Okay, this is only another 3 train stops from there, metro stops from there. So all of these numbers are going to have an 8 in front of it. If somebody has any doubts about apartment prices not going up, please talk to us. Okay. Now, so my recommendation to you at the moment is, in Sydney, if you can buy an apartment at the lowest end of the price range, okay, go and search if you want how much you can buy a 2-bedroom unit in Mount Druitt. Go and search if you want how much you can buy a 2-bedroom unit in Liverpool. Go and search wherever you want, okay? Second factor, the suburb must have significant potential. And the third factor, there has to be significant high infrastructure spend in that location. If you don't have population growth, okay, you're not going to see prices go up. I get asked a lot, what about regional areas? Well, I say go and look at the population growth for the next 20 years. First thing you must research on. And what infrastructure is the government putting in? People ask me, should I go and buy an orange? Well, go and see how much infrastructure the government's putting in there and what is happening there. Then you make your decision. It's very simple. The research we do is very simple, okay? So Sydney is going to be transformed. Why Sydney? Because Sydney is going to be transformed. It is being transformed. You are all watching a once in a 50-year transformation of a city. The city is going to be 6 million people by 2036 and 8 million by 2054. We need 40,000 dwellings per year in this city for the next 20 years. We're going to keep needing 38 to 40,000 dwellings in this city. This year, it's double that number because the double of the migration has happened, okay? So we're going to have a shortage. There's over 50 billion of just new transport projects in the next 10 years. Just transport, okay? Then you got the airport. You got tunnels being built. You got hospitals. You got schools. You got universities. Everything is... Why is it happening? All of this transformation is happening because the population is going to have to... We have to cater for 6 million people living here and 8 million by 2054. We are rezoning more, okay? We're building capacity everywhere. So I won't go through this in any detail, conscious of time, but the point here is very simply the west of Sydney is where there's going to be significant population growth. Our GDP in New South Wales is bigger than these countries, Malaysia, Singapore, Hong Kong. Our GDP just in New South Wales, okay? And then you've got the airport coming up. You've got the Sydney Aerotropolis coming up. And I don't have to tell you about all the development going on in the Northwest. So there's significant amount of population growth and infrastructure spend and all of those things happening in the West. So what is my pick for the day for you? It's a project in Blacktown called the Atrium. Okay, this is what it looks like. And this is what the Atrium inside looks like. Looks like a 5-star hotel, actually. But why Blacktown? Why this project? Okay, firstly, why this project? This project's location cannot be any better. It is right opposite the West Point shopping center. Okay, you can't get any closer to the shopping center. From here, you can walk to pretty much everywhere. You won't need a car. The apartments are a very good size. It has got all the mod cons, no corner cutting. So 2.7 centimeter height, European appliances, 40 mil scissor stones, everything, ducted air conditioning and recessed down lights everywhere, roll up blinds. It's got everything. And it's, you know, and look at the size. The size is big, okay? And the price is the most attractive factor. Why am I bullish about this project and why Blacktown? So this 620 for this apartment is a steal. In today's prices, construction costs is $400,000 for a 2-bedroom apartment. In this location, you cannot buy a land at $200,000 per apartment. You can't. So how's the developer going to make money? the price has to go to 700 very, very quickly. The next new building that's going to come up there will be priced closer to the 700,000 mark. Okay. And in a very near future, it will all be 800. In fact, by the end of this decade, it'll be all close to $1 million. So here's an example of a layout, 16 square meter balcony. I'm not going to dwell on this because what I want you to do is call my colleagues, make a time and talk about it, because whatever apartments are left here are going to sell very, very quickly. The bedroom sizes are very, very good. 3.8 by 3, 3.45, big size lounges, no wasted space, very well laid out. Okay. And so in terms of location, why is location important? So the picture tells a story here. You've got buses, you've got trains, there's more modes of transport coming. You've got Blacktown Hospital, there's a huge research center being built. West Point is across the road. There's amusement parks here, Western Sydney University, TAFE. I mean, the list goes on, okay? So what we do when we look at an area, we try to see if we can tick the 10 boxes. Here, I've got location, tick. Population growth, tick. Infrastructure projects, tick. $2 billion in infrastructure coming into Blacktown. Economic drivers, tick. New job creation, tick, okay? And on the right side, I'll let you read all of that. So it ticks, for me, it ticks all of the boxes and more. Not talking about the new airport being close by. Not talking about the billions of dollars that is going in the amusement park there and so on. I would like to actually see if I can share this and share a very short video with you. I may not be successful, I'll forewarn you, but I'll give it a go.
It's a plan that has been in the works for 7 years.
Hope everybody can see that.
Now, a mega developer has signed on and $2 billion has been injected into the heart of the West. The project designed to give one of our biggest regions a much-needed facelift.
From above, it's barren, but Blacktown is building up to a boom. This plot of land will soon be transformed with a stretch of green and new office space, even facilities for our most vulnerable, including a brain and spinal institute. It's a $2 billion master plan for our West.
We're looking at 5,000 new jobs created by this activity.
This project shouldn't take more than 4 years, developed by the same company who reinvented Parramatta Square. And for workers in the area, it couldn't have come at a better time.
Blacktown's a large area, large suburb, lots of people live around here. So it's very important to have Blacktown well maintained.
It's looking tired, it's looking really tired. It needs a facelift.
Blacktown is the most populated local government area in New South Wales. The mastermind behind this plan wants to model the best public spaces from around the world to cater for a population that continues to soar.
Over the next 20 years, there'll be 650,000 people in Blacktown City.
And they'll be promised a modern metropolis. Angelique Opie, 7 News.
Okay, hopefully you all got to see that. It probably wasn't that clear, but the message certainly came through. Okay, just gonna go back to the screen. Okay, so in conclusion to my session today, I just want to say one thing. Please don't follow the media blindly. If you follow the media blindly, you'd think that property values are going to decrease significantly this year. and with interest rates being, in their words, as high. Do your due diligence. You don't spend money, that type of money that you would do by buying properties. You know, it's always in the hundreds of thousands of dollars. It's not like buying a car or other things. So do your due diligence, speak to the experts. And property is a long-term view. When you're building a portfolio, it's not like you buy it today and you sell it tomorrow. So you've got to have a view for at least 5 years with property. Okay, I would say that you should actually have a view of longer than that, somewhere around the 15 to 20 years. When you know you not just see your property value double, but you see it triple in price. Okay, I have been investing, as I said, for over 40 years. I think there's no reason why any of you listening to me today could not, if you and your partner are both working, there's no reason why you cannot build a portfolio of double digits. So you all should be aiming at least 8 to 10, but if you're on very good jobs and very highly paid jobs, there's no reason why you can't build a portfolio of over 20 properties. Okay, so with super, I think you found that when interest rates went down to 0.1%, you know, if your house was paid off and you had $1 million in your super, you could not live on that if the interest rate you're getting on it is 1%. 1% on $1 million is only $10,000 a year. So you can't rely on your super to become wealthy. The reason why Australians per capita are the wealthiest in the world is because they own properties. Okay, we've gone past Japan, gone past Switzerland as the per capita wealthiest country, wealthiest people in the world, is because we buy properties and property values keep going up. I'll stop there and take some questions, and I'll get some of my colleagues to share their numbers also in the chat, so you can actually be in contact with them if you wanted to find out more about this project. Now, we're not a one project shop, by the way, but we are very bullish about this project at the moment. We are, you know, we have house and land that we are pushing very hard in parts of Brisbane, Southeast Queensland, I should say, and parts of Perth. We are actually pushing that because we see value there as well. But if you are looking for this price range for a solid investment in a solid location, then I don't think you can go wrong with this project. I will happily take some questions now. Hopefully you found that session insightful and useful.
Thanks, Sachin. Feel free to ask either on the chat or if you want to yell out, whatever's easy. I'm Chris from Nivas, guys. Cheers.
No such thing as a silly question, so feel free. All quiet. Raj, do you have a question?
Got somebody who's just asked a question. Greg Singh has asked a question. Is it better off to buy a house and land in Perth or an apartment in Blacktown?
Very good question, Greg. I get these questions a lot, actually. So listen, it's at the end of the day, you know, I would say both are good. And again, if you're buying in Perth, please talk to us. The opportunities there are great at the moment because the rentals are very high. There is also good migration, and property prices are due to actually increase there as well. So no question in my mind that Perth is good, and that's why it's on my list as well. We are away from Adelaide at the moment because Adelaide has had a decent run, and whilst there's still got growth there, we think there's bigger growth in other places, which is why we're still concentrating in parts of Southeast Queensland and parts of the Perth market. But listen, I guess if the only way you'd know which one was better is in 5 years' time. You'll say, well, I had 60% growth here and 50% there. You know, it's a crystal ball that I can't answer, but both are good. I'm not gonna. I never push one project against another. So both are good places to invest. But if you're only buying house and land because it's got the land component, I can tell you this much, that apartments are due to go up and go up a lot. So I'm not joking when I said that brand new two-bedroom apartments by 2030, you'd be looking at close to $1 million or $1 million plus anywhere in Sydney. I'm not exaggerating at all. Okay, I'm not exaggerating at all. So Sydney has a lot going for it.
Awesome. Thanks for that, Sachin. We've got another question from Ritz. So on a similar line, is it worthwhile to go for a house and land in Perth or an established property?
The key thing, Ritz, with buying any property is you've got to buy at the right price, right? The reason why I am telling everyone that when I said Sydney and I showed you Sydney and I said the lowest priced apartment in Sydney is because I want my listeners and my clients to buy at the bottom of the market. Okay, right now I see a bottom there. I can sell you a $950,000 apartment in Lidcombe, which is a Meriton apartment. I'm not going to do that because I don't think that will have the same level of growth. I've had people who did not listen to me and bought a two-bedroom apartment in Rhodes for $1 million. And they're wondering why they did not have a price increase in 2021 when everybody else did. Okay, so if you want to buy an established property, yes, we can help you with that as well. But if you're buying an established property, just make sure you've done a lot more homework and you make sure that you buy at the right price. Okay, it might be cheap relative to Sydney, but you've got to see and study the suburbs, study all the pre-sales there, talk to experts, get them to do all of the investigation for you before you actually delve into it. So buying in a remote place like Perth, which is good 4.5 hours on the plane, you need to be sure you know the suburb, know the house, and just be as risk averse as you potentially can. But again, an established house can also give you very good growth. And the entry point for existing houses in Perth, you could probably buy something below 500,000.
Perfect. Thanks, Sachin. Right. The next question is from Rohan. How would you say investments in property has fared against commodities such as gold and silver, for example?
Rohan, thanks for your question. Listen, gold has had a massive increase in prices over the last 5 years. I do remember when the gold price was $250 an ounce. I was actually the director of HSBC Precious Metals at the time, and we were the largest seller of gold in Australia in the wholesale market. But it is a volatile commodity, fairly volatile commodity. So the run we have had in the last 5 years may not be repeated. It can have falls of 20, 25, 30% as well. So in the short term, I would say gold has fared extremely well against all other commodities, and silver basically follows where gold goes. Okay, 9 times out of 10, silver follows gold. And I get asked a lot about bond markets and should I buy bonds. I get asked a lot about cryptos and should I buy cryptos. These are extremely volatile products, extremely volatile. The thing with property is I can put my hand on my heart and tell you that the graph will only go up and up and up. You might have some small blips, but if your property price doesn't double in 10 years, then there is something wrong with the way you might have done your purchase. Okay. So you got to buy the right place, the right time, at the right price. So it's not just about location, it's also about buying at the right price in the right place. Okay. So I can't comment anymore. I mean, most people ask me equities versus property. So the equity market, and most of you are all exposed to the equity market if you have your super looked after by one of these super companies. You would have exposure to the equity market, and you all know that the equity market has been very, very flat for the last 2 years, even last 3 years, and some stocks have done very well. So during COVID, if you bought, for example, Qantas, very topical at the moment, Qantas, but if you bought Qantas, it went down to about $2.50. It has gone up above $6, and now it's settled around $5.50 or something. I haven't looked recently. So listen, there's always going to be the value picks, if you like, in any kind of commodity. Even in equities, you've got to know the market, you've got a value pick. Okay, banks have been extremely flat. You know, some of the, with iron ore prices going up, some of those mining companies, they're volatile. If you know, things like realestate.com, things like Blackmore's, I mean, there's a lot of stocks that sort of fell a lot significantly and have gone up, almost doubled. So it's not about for me to cherry pick and tell you which commodity is good. I specialize now in property. I have delved in other products in the past, and my wealth has been created through property. And I am happy to show any of you listening today and have a one-on-one with you and teach you how it is done. Okay, and I mean that, and I don't charge for it. But property is a class of asset in this country that you can't go wrong with if you continue to buy well and start building your portfolio, know how to borrow money to actually invest in property. And all of these are, you know, I've got a lot of the tips and traps and advice that I can, advice is probably the wrong word. I can lead you into the right direction with your property purchase. I'll stop there. Thanks, Ron.
Amazing. Thanks, Sachin. Okay, the next question is from Ritz. What are your thoughts on Mount Gambier and Caboolture/Logan?
Okay, listen, Mount Gambier is the second largest city out of Adelaide in South Australia. Is that right?
Correct, yeah.
Listen, it's a hard one for me to answer on Mount Gambier. It is a second largest city, but it is still a relatively remote, I mean, it is regional location. So what I would first do is what I said earlier in my talk is you've got to look at the population forecast growth in the area and what infrastructure spend is happening in that area and what type of people are moving into that area. If it doesn't tick all the boxes, then I would suggest to you that you look at other places where you can tick the 10 boxes, okay? You don't get a second chance. It's a lot of money. Yeah, I've been buying properties, selling properties, and doing all of those things for quite a number of years, over 40 years. So yes, I have made mistakes, right? But it's about learning from those mistakes and then doing it right the next time. So yes, some of my properties only grew like 20% over 5 years, which is not a lot. And some properties doubled. So you got to make sure your investments give you the biggest bang for your buck. And that is important. And that's why, you know, that's where we can assist you. Caboolture and Logan, well, Caboolture is in the, for those that don't know, Caboolture is in southeast Queensland. It is in the north part of north of Brisbane. It sort of borders onto the Sunshine Coast area, not far from the Sunshine Coast. not far from the Glasshouse Mountains. We do sell in Caboolture. It is a good area. It is a growth area. Not far from Caboolture is Morayfield, which has had significant growth over the years. Caboolture is slightly cheaper than Morayfield. It is a good place to invest. Absolutely a good place to invest. We can assist you with that as well. Logan, of course, Logan Shire has got about 40 suburbs. Out of those 40 suburbs, stay away from about 5 or 6 of them, which are the dodgy ones. The other suburbs are all pretty good. And we've sold a lot of properties to people in Park Ridge and other parts of Logan, where they have, as I said, they bought houses for 450, 460, and the same houses now are around that 700,000 mark. So there is some good buying in the mid 600s in some of the suburbs that we are focusing in Southeast Queensland. So I'd be happy to have a chat with you, Ritz, on those.
Amazing. Okay. The next question is from Baljit. Any good location in Melbourne for investment?
Baljit, we do have a couple of spots that we did promote in Melbourne, but we are very, very selective. We generally don't like Melbourne, generally. And again, it comes down to, you know, when we were looking at Adelaide, we looked all over Australia and we all agreed in my team, based on all our research, Adelaide was the place a year ago. And I am so glad that we went to Adelaide and talked to builders there directly. And now all of those people who bought from us in Adelaide, like I said, for around that 500,000 for a 4-bedroom, 2-bathroom, 2-garage, are now sitting on. So those same properties are now around 620, and the houses are not completed yet. So whereas in Melbourne, firstly, I'm not an expert, but secondly, if you really, really are interested in Melbourne, it's all about Melbourne versus, you know, what else, right? So I think it was Point Cook. We had a very good project in Point Cook. Raj on the call here.
Yes.
Yes, we did. Yeah.
Raj, Point Cook, I don't know if you've got any stock there. We like Point Cook because of the price entry point. There were townhouses at around the 650 to 700, very close to the city, very good demographics.
And the beach,
suburb
yeah.
had a lot of doctors and other professionals moving in, not far from water. It ticked quite a few boxes for me, so we took that project. But we can take this offline and have a chat to you. Baljit.
Amazing. Thanks, Sachin. Okay, now from Casey, with the new metro line and airport, how is St. Mary's Apartments for investment?
Good. Definitely good.
Good.
Yeah, so nothing wrong with St. Mary's.
right.
St. Mary's has benefited significantly from the metro coming in there, and also proximity to the airport and Aerotropolis. Okay, so nothing wrong with St. Mary's, but see, the key thing with St. Mary's is yes, there is some infrastructure coming in, but if I compare St. Mary's, you're paying around the same as Blacktown. St. Mary's now for a brand new apartment, you'll be paying about 620, 625.
Correct.
So if I were given a choice, St. Mary's or Blacktown, 100% I'd go for Blacktown. 100%.
Every day. Yeah. For sure.
Yep. And that's because of what I just showed you. Blacktown is going to be, you know, it's going to be a major center very, very soon. You know, there's no doubts about it.
No, perfect. Thanks for that, Sachin. And now we have got one from Raj. All right, so there are a lot of older properties for sale in areas closer to Penrith. It's considered a low socioeconomic region. When it comes to selecting a suburb, how much does demographics play a role and location with regard to future growth?
Okay. Very good question, Raj. Very good question. Now, listen, when prices go up, like generally when prices, if I take 2021 as an example, every house and land, I won't talk about apartments for 2021, but every house and land project in Sydney went up in value. And it was the land value that was going up, and the cost of construction caused house prices to go up as well. So those two factors actually, whether you're living in Gregory Hills or Austral or Rouse Hill or Marsden Park or Ponds, everywhere it went up. The scale was slightly different, okay? The scale in some places was different, but everything went up. Now, recently, I've had a couple of clients who live in that southwest area and want to move to the northwest area. And the reason why they want to move is because of demographics. They say, "Oh, we don't want our kids to, to go to schools there. We want them to go to more affluent suburbs so that they grow up with more, better school, different demographic kids." So coming, for example, to Bella Vista Primary School, you've got kids there who are, from the Bella Vista area and Kellyville area. So they're doctors and fathers are doctors, or, all those white collar, blue collar professions. So, it's not just demographics that you got to look at for property price growth. Okay, there are different factors, different reasons why people would move. At the end of the day, the rating of a school goes up because of the people that move into the area. And I can give you a lot of examples like Cherrybrook. There's nothing in Cherrybrook except there's a Cherrybrook Technology, and people move there because of the school. People are moving to Ponds now because of the school. The school's rating has gone up because most of the kids who go there are Indians, and they do well, and their parents are both professionals, so the school's thing goes up. So listen, it's not so much to do with demographics, I think. Sometimes you have to pick a suburb. Some suburbs, you could have 5 suburbs, and one of those 5 could go up 50% in price, and the others are only gone up 20% in price. Bella Vista is one of those suburbs. It's done extremely well in the last 3 years. So the prices have almost doubled, right, in the last 4 years. So, but you go to Glenwood, for example, which is just on the other side of Old Windsor Road, if you know Sydney. And the prices haven't gone up as much in that suburb, even though it has done well, but it hasn't done as well. So these are some of the nuances, I guess, with property investing. Stick to a sought after suburb, and do your homework, see what's coming in there, and it'll do well.
Amazing. Thanks, Sachin. Okay, Greg just asked, Caboolture and Logan are considered bad by locals, and to stay away. Do you think they're still good investments?
Thanks, Greg, for your question. Yeah, yes, Caboolture not as much, but Logan is the Mount Druitt of Queensland. Okay, so yes, it does have, and sorry, no disrespect for anybody that lives in Mount Druitt. It's a nice place, but unfortunately, there's a lot of crime around there. But Logan Central, Kingston, Woodridge. These are 3 suburbs that come to mind where most of the crime is. Okay, but Logan is a big shire. Like I said, it's got a lot of suburbs. Okay, Park Ridge, I just gave you an example. Park Ridge, the prices have gone up 50% in 2 years. 50%. In fact, I wish I had bought a house and land there as well. That's how much it surprised me how much it's gone up. So if I say to you Blacktown Council, so Blacktown Council has Mount Druitt in it, but Blacktown Council also has Rouse Hill in it. It also has Marsden Park in it. If anybody, it also has Ponds in it. Okay, so there are good and bad suburbs in every shire and every council. So you just gotta stay away from some of those bad suburbs. But if there is a bad suburb, in inverted commas, that is about to be gentrified, I'll give you an example. Redfern in Sydney. Nobody wanted to live in Redfern. Redfern was the low housing commission for Aboriginals, and it was violence every day on the street and so on. Redfern got cleaned up. So apartments I could have bought there for 300,000 are now selling for 1.4 million. Okay, so things get cleaned up over time. It's called gentrification of a suburb. And so Logan, right now, yes, I would away
Sorry, Sachin, we're losing the
those
voice.
ones because in
Sorry,
those
Sachin.
ones there's still a stigma. If you live in
Sorry, Sachin. Can you hear me? Your voice is gone.
sorry, yeah,
We've lost you. Sorry.
can you hear me?
Oh, can you hear now? Hey guys, it's Chris from Nivas. I think we had a bit of technical issues with Sachin just then. It just dropped out. So what we can do is, if you just want to contact myself, I'll put my number on here. If you've got any questions, guys, just give us a. Oh, hang on, is he back? But yeah, if we drop out or anything, just call us. We can book an appointment with Sachin and go through all the questions that you guys want. Yeah.
Can you hear me now?
Yeah, got ya.
Yes, yeah.
Okay, sorry about that.
That's all right.
Don't know what happened. Technical issues.
Sorry, guys, but yeah, message us if you need anything either way. Cheers.
We're not doing any more questions. We're good.
I have Sachin, one question. So the thing is,
Yep.
yeah, so we considering buying a property in the western Melbourne part, like because south is definitely it's bit out of the budget. So if we are getting the package around, a month 600K range in areas like the one which you already mentioned, like Point Cook, but a bit further away from Point Cook. So if we see like, Deanside,
suburb,
Mount
Harshit? Which suburb?
Atkinson, sorry?
Which suburb are you looking at?
In Deanside, Mount Atkinson, and in Rockbank, Melton, something around that range.
Okay.
So what are your views on capital growth, provided, there's a huge difference on package price between Sydney, Melbourne? So what do you think, like if we still get around in 600K range,
So
housing
Harshit, are you looking at it as an investment or to live in?
preliminary as a PPOR, and then yeah, to have a capital growth and pull out the equity out of it in 2-3 years so that we can buy the investment property soon.
Yep. I'll be extremely honest with you, Harshit. I am not an expert on the west of Melbourne.
Okay.
But we can we can talk to some people for you and give you some feedback. So leave your details, and we have a big network in Melbourne, but we have out of all of Australia, probably our least number of sales has been in Melbourne.
Okay. No, that's fine. Yep, if you can connect me with someone, or if
I
you
will definitely I will give you feedback on those suburbs. Yeah, we'll
Awesome,
make a note of that.
Awesome. Thank you, Sachin.
Welcome.
Yeah, we can have a chat to David, Sachin, and yeah, all good. Yep.
Yes, definitely.
Perfect. Okay. Couple of just quick ones. So next one is, how is Marsden Park as a suburb from Sabhagya?
Sabhagya, Marsden Park is a great suburb. It's done extremely well in terms of price growth. It has had some correction, obviously, when rates started going up, and the reason for the correction was more because the prices had gone up so fast, in terms of the growth. So okay, so you there, Sabhagya? So
Yeah, this is Saubhagya's husband, so she's in the kitchen, so I'm just
okay,
listening.
no problem, no problem.
Yeah.
So I was just saying that Marsden Park is a great suburb. It is obviously very heavily populated with subcontinent population, and it is a sought-after place. There is a lot of infrastructure already there, and there's more infrastructure coming. So you're going to see a metro come through Marsden Park. It has to. So Tallawong will go through presumably Marsden Park and go to St. Mary's before it goes to the airport. So, I mean, you're not going to get large companies like Costco and Bunnings and the like, going to a place like Marsden Park if they did not see value. They do more research than we will ever be able to do. So they know that there is growth coming there. And there'll be a significant number of jobs created in Marsden Park itself in the coming years. So the New South Wales government wants people to live and work in the same proximity within 15 to 20 minutes. And that's why they're creating a lot more jobs in places like Norwest, in places like Rouse Hill, in places like Marsden Park, and so on. So absolutely nothing wrong with Marsden Park, great suburb. I'm sure it's a great place to live as well.
Yeah,
Infrastructure is lagging there, so schools and clubs and other things. So the infrastructure has to come very soon.
Okay, yeah.
Amazing.
Thank
Okay.
you.
Thanks, Sachin. Thanks for your questions, Sabagya. Okay, now the next one, just two more questions. What are your thoughts on, I missed one from before, Oran Park? What are your thoughts on Oran Park?
Great suburb, Oran Park. Also had significant growth like Gregory Hills did, and all those suburbs nearby, they all had significant growth. It will continue to grow. Two things going for it. One, infrastructure, and two, is very close to the airport in Aerotropolis. So there's so much development happening in that area that Oran Park will always be a good growth suburb.
Beautiful. Thanks, Sachin. Next one, last question. Somebody had mentioned, what are your thoughts on Brussels?
Suburb, Ipswich Council.
Yeah.
Yeah, listen, Brussels is had good growth as well. We were selling in Brussels in the mid fours before.
Yeah.
Now it's in the mid sixes. So prices have gone up like they have in Park Ridge. I mentioned Brussels has also gone up. There's in Ipswich-shire, the key thing in Ipswich-shire to look out for is any suburbs that have that are flood prone. So because there are so many suburbs that are flood prone, the ones that are not will always do well. So Brussels would have to be one of them because it is experiencing good growth and it's a good suburb. Ipswich-shire has a lot of suburbs as well, like Loganshire, and it's doing quite well. The one thing about Ipswich-shire is it is going to have the highest population growth in the next 10 years of any shire in Southeast Queensland. Okay. And if you want more information on that, Milan, we would be happy to share that with you. I covered that quite a lot in my last webinar that I did on Southeast Queensland. But I'm happy to share some more information with you, Milan. Okay.
Awesome. And then that's actually Anand had a quick question. North Kellyville, any more room for growth? As there's no station there.
Listen, North Kellyville has had some really good growth in the last 12 months. To my surprise, actually, for the same reason, Anand. No train station, no metro, not a huge amount of infrastructure either. But the thing is that what has given them growth is people who can't afford Bella Vista then go to Kellyville. If they can't afford Kellyville, then they go to North Kellyville. So North Kellyville has had a lot of growth as a result. But I if I was spending the type of money that North Kellyville now asks for, then I would probably look and see if you can actually, because it's almost Kellyville prices. So I would probably try to be closer to the metros and maybe go with Kellyville, depending on what you're looking for. If you're looking for a place to live, then I think with the North Kellyville prices now, you've got a bit more choice in the neighboring suburbs to have a look at. If you're looking for an investment, then I would not go to North Kellyville, to be honest. There are better investments. You can talk to us. We've got some very good investments in Rouse Hill. If you're looking for house and land, we have some excellent opportunities in Rouse Hill, and I would say, and very close to the Tallawong Metro, walking distance actually. So depending on what you're looking for, please give us a call, and we'll be able to talk you through it.
Amazing. All right, I think that pretty much wraps it up, I think.
Okay. Thanks again, everyone, for attending, and feel free to contact us if you want to have a chat with us. We're more than happy to do that.
Anytime, guys. Our number's on the chat. Just give us a call, send us a
Hi,
message. Happy
Saurabh.
to help.
Thank
Did
you.
you ask? Did you
Thank
have
you,
a
guys.
question?
Have a good night.
Thanks.
Anyone have a
Take care.
question? No.
Okay.
Okay.